So leverage has always been here, and obviously, Binance and BitMEX, we make a lot of money during leverage. It's cheaper now. So if you take a look at the Athena rate, and this is basically capturing how much it costs for you to go long crypto, essentially, right? And crypto's been up only on a long-term, medium-term basis since it was created in 2009. So that's why speculators are willing to pay an interest rate to get long Bitcoin, Ethereum, Solana, whatever, right?
Yeah.
So this rate has come down. It's much cheaper to borrow money and go long. Therefore, the amount of open interest in derivative contracts continues to grow. So I think that as we make the price of leverage cheaper, the price of money cheaper than crypto, people will express their views using more and more leverage, higher open interest, whether it's on a SEX or a DEX. And so I think that this really powers, more proliferation of derivatives.
Hey guys, welcome to Everyday Finance. Imagine having a resource that pays off despite your imperfections. That is the brilliance of Bitcoin. Bitcoin provides you the freedom to be early, late, or even wrong and still make a lot of money. Unlike traditional investments that need perfect timing, you're sitting on a huge cushion if it rises to $1 million after entering at $100K. Bitcoin's asymmetric upside stands. Out in a world where fiat currency is always depreciating and inflation takes away its savings, Arthur Hayes doesn't mince words. He believes that if central banks continue to inflate, profits could increase by 10 or even 20 times. He sees Bitcoin as a logical step in an illogical system rather than a gamble. Since 2009, it has destroyed all significant assets, including gold, equities, and real estate. Bitcoin, created for the digital age and born out of catastrophe, is a symbol of financial defiance and opportunity for the future. When the brave stand to gain the most, why play it safe? Bitcoin's trajectory will only strengthen if liquidity continues to pour into the system. Finding the launchpad is more important than predicting the peak. As we delve more into Arthur Hayes' compelling explanation, stay tuned. Remember to press the bell, and subscribe for more market insights.
The math is always the same, money printing. So how much money will a particular central bank or government agency print? We can apply some math to that.
Yes.
And then we say, oh, well, I think Bitcoin, based on historical relationships with the amount of credit created, will move up or down this amount. And so I posted a chart, I think it was like Bitcoin at $3.4 million. And, I said the Fed was going to print something like 15 trillion. And I used a historical slope from COVID times, and that got me to this number. Well, I think, I hope that'd be nice. But I think I'm all about getting directionally correct. And then, we see what happens. But I'm not wedded to a particular number. I know humans like, round whole numbers with base 10 ending in zeros or fives. So that's why I always pick a number like that.
Yep.
So I think Bitcoin will continue to be the best performing asset ever. Now, obviously within crypto, you might get 1,000x in some shitcoin or whatever. But, from the largest asset will continue to be the largest asset. Maybe Bitcoin dominance goes down a bit if Ethereum catches a bit or some of the other major tokens. But I still believe Bitcoin is going to perform extremely well. Maybe we get a 10 or 20x from these levels if we get that level of money printing, and then versus everything else, Bitcoin will be the best performing. So, since 2009, it's been the best performing asset. Tom Lee was on stage talking about, putting Bitcoin up there with stocks and the S&P 500 and the NASDAQ, and it's outperformed all these things. So if you believe that the money printing is going to happen, then crypto, Bitcoin, these are the best things to own. Yes, your stocks will go up. Maybe your government bonds will go up. Gold will go up. But the point is to make the most money you can given a belief in a particular outcome. The narrative I think that's really sexy this time around is fundamental season. We're all about cash flows.
Yeah.
So if you think about the best performing new issue of this cycle, it's been Hyperliquid.
Yeah.
Why? Because they take 97% of their revenue, they buy back their token. And so the Hype token holders are participating in the upside with the protocol itself because it generates revenue. And I think after 10 years of doing token investing, we're tired of investing in things that have no clients, that make no money, and the token, gives us no actual real cash flows. But if we have these DeFi applications that hopefully millions and billions more people use over the next couple of years, then the projects that take that revenue and give it back to the token holders, whether it's through emissions or buybacks, those are the ones that are going to do very, very well. And we've seen that happen in this past cycle. We got the culprits will play the corporate finance game of putting Bitcoin on the balance sheet, do some funky corporate stuff, issue, debt or whatever equities and buy more crypto. I think that, MicroStrategy and MicroSailor have made that a popular choice. And so around different equity markets around the world, they'll start having the digital asset treasury companies, the DATs, proliferate in those particular markets. So leverage has always been here, and obviously, Binance and BitMEX, we make a lot of money doing leverage. It's cheaper now. So if you take a look at the Athena rate, and this is basically capturing how much it costs for you to go long crypto, essentially, right? And crypto's been up only on a long-term, medium-term basis since it was created in 2009. So that's why speculators are willing to pay an interest rate to get long Bitcoin, Ethereum, Solana, whatever, right? Yeah. So this rate has come down. It's much cheaper to borrow money and go long. Therefore, the amount of open interest in derivative contracts continues to grow. So I think that as we make the price of leverage cheaper, the price of money cheaper than crypto, people will express their views using more and more leverage, higher open interest, whether it's on a SEX or a DEX. And so I think that this really powers, more proliferation of derivatives. I think a new narrative is decentralized science. Bioprotocol is something that's quite interesting, and people are coming together to fund, project scientific questions and answering them. And hopefully there's a commercial thing on the back end where they can make money. But I think this is a new narrative of how we can take this community funding aspect of crypto, apply it to how we fund science, and maybe take it out of government and large company control. So the decentralized science is literally just like, instead of a government or a university funding a question and the answer, it's, hey, I want to figure out how to make a better dick pill. So I'm going to fund that because I want to make the next Viagra. Will you come and give me some money so I can ask this question in a different way? And basically the bioprotocol allows DAOs to create these tokens where you can participate in the upside, assuming that the experiment goes well and there's some sort of commercially viable thing on the back end.
If this much money could be printed, and here's one way it could happen, is the magnitude there so that you're directionally right, and you can be, you can fuck around with a lot of stuff. If you bought something at 100,000 and it goes to 1 million, 2 million, 3 million, whatever the price is, you're allowed to make a lot of mistakes. But if you're, in something that doesn't have the potential to have that sort of magnitude of upside, then obviously it's much more difficult to earn a positive return. Majority of it will go into Bitcoin, and I think obviously the new meta is, fundamental season, cash flows, revenue. So the token projects that do really well in this alt season will have sort of a hyper liquid style, profitable, taking those profits, buying back their token, or doing some sort of emissions. I think that's the expectation of traders this time around. Tether is the best bank that's ever existed in human history. They're the most profitable bank per employee ever in human history, with 150 employees, and they generate something like $8 billion of net income every year. And it just goes to show what's possible with a decentralized public blockchain, where all of your costs can be done with technology. And this is what the bank will look like of the future, and that's why Tether is so highly valued.
Caution becomes danger when money printing becomes the new normal. The crypto cycle of old? Irrelevant. Bitcoin is not speculation. Rather, it is survival in an economy driven by limitless liquidity. The astute money knows that only asymmetric wagers are worthwhile. Errors are irrelevant when the reward is this large. Altcoins have been screened, not eliminated. The only projects that will be selected are those that have strong buybacks, consistent cash flow, and actual revenue. Tether's operating like a contemporary bank, but one that is quicker, more efficient, and more lucrative. Ethereum continues to dominate the infrastructure layer, controlling the digital rails that all other systems rely on. Simply said, the actual players are already in place, according to Arthur Hayes. The others are only now becoming aware that the game has shifted. As we continue to analyze his interview, stay tuned.
I mean, most of Maelstrom's portfolio is just long Bitcoin and ETH, right? And I don't fuck around with that. I swing trade maybe 10 to 20% of the fund. So we'll go maybe to 80% invested to 100% invested. And we'll trade whatever shitcoin that I feel like I want to trade on the liquid part of the books. We also do some financing trades. And then on the venture side, we write very, very small checks, really just to understand what's happening at that level, because I think it's easier to deploy capital in the liquid space and in the early stage venture, just because you have to only invest in the bear market. You have to wait 2 years to get your tokens and unlocks and all this kind of stuff. So another financial product to trade. It's great that this is sort of a backdoor to give crypto exposure to investors who otherwise wouldn't be able to own it. Obviously, we have a lot of DAT companies. I think we'll have more DAT companies, mostly because the banks make so much money off these things. Someone told me that Cantor Fitzgerald made $160 million last month in fees, just doing DAT offerings and sort of the follow-on ATMs and convertibles and stuff like that. So that's an amazing amount of money for an investment bank to make in a single month. So when JP Morgan and Citi and Goldman see those sorts of numbers, they're going to do the same thing too. And they have a much better distribution network of institutional investors. So I think that the DAT ecosystem is going to grow, but the capital is going to be concentrated in the larger names, like a MicroStrategy or a BitMine. Like they're going to receive the lion's share of the capital. But of course, you still can do a $50 million DAT. It's just not going to trade very much. I mean, it doesn't really matter the underlying token. This is a corporate finance exercise. And so it's all about, do you have the right connections to issue non-dilutive capital and then buy this token, whatever that token may be? And it's all predicated on how large is your DAT, how much average daily trading volume you have. Because then you get to add into the index. And once you're in the index, and the passive money buys your DAT irregardless of what you do as a management. It doesn't matter. They don't care. It's in the index. I have to buy it. So it could be BNB. It could be rat poison. It doesn't fucking matter. Like as long as you're able to generate the size, you can do the follow-on offerings and buy what you need to buy. So yeah, of course I have to be bullish on some of the other things. I'm involved in UPXI as an advisor. I've done a BNB pipe and an ENA pipe as well. So yeah, I believe in these things, but it is a corporate finance game. Ideologically, I try not to have an opinion on, we don't tell the people that we give grants to what to do at Bitcoin Core. We're a neutral party. Obviously, we just want to contribute to Bitcoin being as rock solid as possible, because that is the foundation which our entire industry is built upon. So that's why we, give these grants. We've given 4 grants so far. But, my view is it's an economic game, and we shouldn't try to arbitrarily restrict what people put on the blockchain. If they're willing to pay the economic price, whatever that is, then all data should be on the blockchain.
All the money printing.
So I just read the newspaper, and when I read the newspaper, the politicians say they're going to do this or that, spend money on this or that. Very, very ever rarely do I hear, and I'm going to raise taxes, or propose taxes to be raised to pay for any of this stuff. And so that's not a very popular thing. Even in, China, which is an authoritarian state, you'd be surprised at how hard it is for the Chinese central government to collect taxes, and which leads to a lot of issues between them and the local governments. So if China can't collect taxes, and it's worried about, social people being pissed off at raising taxes, what is a democracy going to do? So everyone's going to print money, and if you read the newspaper, it's just like, oh, we're going to give out goodies, and we're just going to create this money out of thin air and do it. So I don't know why the Bitcoin or crypto cycle has to be 4 years. That's supposedly ending in a few weeks. If the liquidity is going to continue to be created because the politicians who are appealing to the people that they represent are saying we're going to do something for you and it doesn't cost anything.
Yeah.
I mean, I think there's going to be 3 major stablecoins: Tether, Athena, and USDC. I think most stablecoins will be a US dollar backed thing, because outside of America, people within the fiat realm want a dollar. They want a dollar bank account. They want to own treasuries. They want that yield. They want to buy US stocks. It's just that the governments don't let them do that because they want them to buy their local stuff. So that's why, I think it's mainly going to be concentrated in those. They have the distribution. They have all the large crypto exchanges. The large, payment processors are using them. If you're a social media company, I believe they're going to integrate those rather than do their own. So I think it's very difficult for a new issuer to come on the market and gain distribution. Yeah, so Athena think about it as like an enhanced savings account, and the yield is coming from crypto trading, right? Why do you pay a positive interest rate to go long a perp? Because Bitcoin has gone up however many X since it was created, and it's a fixed supply asset, but the denominator is being printed at infinitum. So Bitcoin theoretically should go to infinity, and therefore if you're going to put on leverage, you have to pay for it. And that is what Athena is harvesting, is this leverage, and they're paying it out as interest on however the period for SCNA is. But that is what Athena is, versus Tether, which is a dollar that's held in a bank account that's ultimately buys a treasury. So it's a different product. Yes, it is both. They're both pegged at $1, but one is a dollar peg stablecoin, one is a synthetic dollar. Just on stage with Tom Lee a few hours ago, and he made a great point that Polymarket, at least in the U.S. election, got the winner of every single state correct. And so I think that at least in politics, and in the U.S. context, different countries have different cycles. You have 2026 and 2028. And you're going to find that the politicians and the people are going to be looking at these prediction markets to inform them of what is the popular opinion, because obviously the media lies to you, the politicians lie to you, but when people put their own money on the line, they're not going to lie to themselves. They want to make money. They're going to only bet on the thing they think is going to happen. So that's why I think prediction markets are going to be a very good social signifier to cut away all the noise. What does someone actually think when real money is on the line?
Markets become more reliant on maths and less on enthusiasm when trillions of dollars enter the system. Memes aren't the focus of the upcoming crypto phase. Fundamentals are leading the way, are projects with robust tokenomics, aggressive buybacks, and actual revenue. Although Bitcoin is still the best asset, new competitors are emerging that treat tokens like stock and create long-term value. Institutions are entering the market, risk appetite is increasing, and leverage is becoming more affordable. With DC ventures that allow communities to finance tests and split results, even scientific research is becoming more decentralized. The old stories are dying out. Participation, profit, and purpose are all rewarded in this cycle. Arthur Hayes has a clear understanding of the situation. The 4-year cycle has simply been overshadowed. This market is currently driven by liquidity rather than halvings. In order to support shaky systems, central banks continue printing, injecting trillions of dollars into the economy. Block rewards are no longer the real lifeblood of cryptocurrency. Credit expansion is? Pay attention to the Fed's balance sheet rather than the countdown clock. In a post-truth digital-first future, Bitcoin will reinvent value, but it won't be by itself. The season of fundamentals has here. Vaporware is being replaced by actual projects with actual cash flow. Bitcoin is being stacked as strategy, not speculation. By digital asset treasury firms who are discreetly attracting institutions. If your token is listed on the index, it is being purchased, and passive capital is flowing. From corporate treasuries to decentralized science, the cryptocurrency market is developing into something more profound, long-lasting, and potent. Whether the 4-year cycle is dead is not the question. The question is whether you've adjusted to the new one, the liquidity cycle.